Hey, everybody. Welcome to the Get Wealth podcast. I'm your host, Brennan Wiersma. And today I'm here with Ryan Schulz, the real estate investor pro. And I'm excited to learn about getting into the real estate market and what that's all about. You've been doing it for quite some time, what it seems. And yeah, I guess I reached out to you on Instagram and you're willing to do this. So thanks for being here today, man.
Yeah, much appreciated. And I'm really glad and looking forward to, seeing you grow. And I really like what you're doing right now.
That means a lot. I've been putting a lot of time into this, but it hasn't really, I don't want to say it hasn't been difficult, but it's been so enjoyable because everybody I talk to just motivates me. And I see what they're doing. And it's like, that makes me want to, copy that or do that in my own way. And especially in real estate is one of the things that I'm interested in. And and for me being where I'm at, I don't have a lot of funds to necessarily put into it. So as far as like navigating that way, I'm really interested in asking you some of those questions. But to start off with, I guess, where are you from? What's your business, and kind of maybe just a quick cliff notes of what you've done to this point.
Yep. So I'm 35 years old. I grew up in Missouri in St. Louis. Went to the University of Missouri, which is Mizzou. Everybody knows it by that. Studied real estate and personal financial planning there. So that's kind of where got into it. And then I've been in all kinds of different industries as far as within real estate. So I've done mortgages. I was a credit manager. I worked in the commercial sector for big people like Stan Kroenke, and he owns the Rams. I've done the residential side as well. So been all over it. I'm a big stock investor as well, and Bitcoin too. So
hey, that's awesome, man. So you went to school for real estate investing. I'd never heard of that.
Yeah. So it's very unique, actually. Mizzou offers they call it an emphasis. I don't know if there's actually a degree yet in real estate, but they have a lot of real estate classes. So one of my mentors that I got to meet, it was actually Warren Buffett. So he's a Warren Buffett investing class there. It's amazing. And he actually said to us, he goes, Mizzou has probably the number one real estate investing degrees in the nation. He said that.
Warren Buffett
said
like that was, dude, you hit the lottery on mentors.
Oh, it was that was number one. So we'll go into it, and I got so on some of your questions, but that was my best mentor I've ever met. So
whoa. Yeah. I mean, I'm sure a lot of people can say that. I mean, not a lot of people, but everyone who can say that would say that that's the best. So I guess, have you always been interested in investing in real estate, or was that just kind of something you chose to get a degree in, or how did that come to be?
So it really started like back in high school. I've always wanted to like understand how money works. And the problem back then, I don't think it's changed much either, but there's really no courses or classes within high school that like teaches anything about money. Yeah. And, like the biggest thing is like everybody one day is going to own a house, but in school they teach us how to dissect a frog, and how much is that helping us right now? It's interesting, I guess, and but like let's learn like what everybody's going to do eventually. And so that's what really got me going with it. And then I read so I started reading a bunch of books, and then went to Mizzou, and I actually was going to do med school, and I took biochem, and I was like, I'm not going to do med school anymore, so back to finance. So did finance and real estate, and I'm really, really glad I did that.
Yeah, that's so cool. That's always confused me why the school system hasn't incorporated things like that as far as like learning how to buy a house and doing your taxes, because that should be part of being literate, with as far as like reading and writing, learning how to do basic math, like learning how our government works, that seems like it fits right in there.
You would think, right? Very simple things, but I think it's getting better from what I've heard. I got a lot of friends that are teachers now, but a lot of that stuff too is like it's a lot of theory. So like a lot of these teachers don't, especially on the real estate investing side, they're not actually real estate investors, and they're trying to teach those programs. That's a really hard concept, because if you're not actually doing it, you don't really know what's going on. And that's what's cool about at Mizzou, the teachers were actually real estate investors, like big real estate investors. So we got hands-on experience with some of the best throughout Missouri.
Yeah, no kidding. So real estate in general, it seems like one of the more difficult markets to get into if you're just starting out. Like for me, there's some obstacles in my path that are preventing me from just buying a house right now. What was your first step out of college to getting into the real estate market? Is it like always a good investment right away?
So it can be, right? You need a foundation first. So you got to understand what you're doing. So, a lot of research, Rich Dad, Poor Dad was one of the first books that really got me hooked on investing. And yeah, I don't know. You read that one? With that? Yeah. Everybody in investing has probably read that at least one time. So it's a good foundation, but then there's other stuff out there, YouTube's great and all these other channels, but like real estate can be super risky if you don't know what you're doing. So there's ways to reduce that risk. And an easy way to start is actually just investing in a REIT. So a REIT is a real estate investment trust, and it doesn't take a lot of capital. And you're not going to make a ton of money off of it. It will pay you a dividend and stuff, but like you'll learn a lot. And now that you're investing in it, like you're actually vested. So you're going to pay a lot more attention to it and understand it more. That's what I learned over the years is people like they do analysis paralysis where they just analyze deals and they do this thing forever and then they never act. Executing is the hardest thing. And that's why I think if you start off small, like a REIT, and then kind of move from there, then that's a good way to get your feet wet. I went full tilt when I did it though. I did kind of the opposite approach. So my first purchase was an 8-family multi-unit. So this was right after the 2008 downturn. So houses were still on sale. And I knew I needed something. I realized that vacancy is your biggest risk. So like for rentals, either you have somebody in there, you don't. So when you own a single family house and somebody leaves, that's 100% vacancy. When you have 8 and one person leaves, that percentage is way smaller. So you reduce that risk. So I actually, at 50% vacancy, I was breaking even on this property. Whoa. I didn't have any money. I was the same situation like you. I had maybe $1,500 to my name. But I found this deal. I worked it out for a good price. I had to come up with 80%, which was for the note. And then I had to come up with the other 20%. I bought it for $175,000 back in, it was like 2009-ish, 10. And I didn't have any of that money. So I found a partner that would help me guarantee the note. They didn't actually bring much cash to the table. I found a bank that would be willing to sign the 80%. And then I had the seller take back a seller finance note for the rest of it. And now I own 50% of this property, and didn't cost me anything. It cost me like a couple $100 from like due diligence stuff, but that was my first deal I've ever did.
Whoa. So, what age was that?
Yeah. I think right about how old you are right now. So 22.
You said there was 8 units in this property?
Yeah.
And is that just like an apartment?
1 bedrooms. Yep.
Okay.
And timing's a big thing, right? So it was after the 2008 crisis. So there was a ton of real estate. It's so different than it is right now because, people lost so much money on the banking side that like real estate, got crushed. And so people were willing to make deals like that. And they still exist. It's just a lot tighter these days just because, as you know, it's hard to find good property right now.
Yeah, man, that's crazy. So let's kind of walk through that, what you laid out there, right? So you said that the first 80% you got from the bank, so you have a mortgage from the bank with that?
Yeah. So big thing people don't understand is like the mortgage process. So you have big banks like Bank of America, JP Morgan, these bigger banks. they have really strict guidelines. So it's really hard for a new investor like yourself when you're starting out to work with them, because if you don't meet these requirements, they're done. They won't even look at you.
Mm-hmm.
But if you actually go to a local bank, a small local bank, a lot of times they'll keep these notes in house. So they actually have an underwriter in house, and they have a board depending on the size of the note. But if it's usually under $1 million, the whoever's writing it up, the mortgage broker will they have their own discretion where they can approve your note for you. So it's a lot easier to get approved. But it's a commercial note because it's over a 4-family. So a 1 to 4 family is residential. Anything above a 4-family is considered a commercial note. Okay. So they keep, okay. So that's the 80%, and they keep that note in house. So they make money off that interest on there. And usually they're like 20 to 25 years. You're starting to see some 30-year, but most of the time it's a 20 to 25-year note. And it's a balloon note. So every 3 years or every 5 years, it'll readjust again. They'll look at it and make sure you're making the payments on time and everything. And then they'll readjust the interest rate.
Okay. And then, sorry for my ignorance, what does this note mean?
Just like a mortgage.
Oh, okay.
Got it. Just mortgage note.
Got it.
Yeah, just a slang term. Anytime I do that, just let me know. I'll explain it.
No, that's what I'm soaking it all in.
Yeah, you're good. It's a lot, but it's a great, like, this is how I went instead of the conservative path. This is like I'm jumping full board into it, you know?
Yeah, you're pretty leveraged at that point. Isn't it a thing where banks will kind of over loan to people? You know, people get a house that they really can't afford, and they're paying this crazy payment on their house.
That's a whole nother, that's a huge issue. So, you know, again, back to the rich dad poor dad thing, he's like, a home is not an asset. Yeah. And everybody hates that term. Majority of people hate it. Unless you're an investor, you totally understand what that means. All he's saying is, anything that you put money into that depreciates and doesn't make you money, like it's not making you cash flow, is a liability. Stuff that makes you money is an asset. Mm-hmm. So what's cool is, like, now is the big term is house hacking. Mm-hmm. I don't know if you're familiar with house hacking. Yeah. So that's basically, you take your depreciating asset and then you make money off of it. Mm-hmm. And there's so many different ways, you know, from renting out a room in your house, Airbnb, to, you know, building something in your backyard and renting that out, to renting your garage space out. I mean, there's so many different really cool ways where you can start generating some cash just from what you currently live in. And that's a great way to start, especially for somebody like you. Like that's where I would start, is like, you know, understand what REITs are. They're not going to make you a ton of money, but it'll give you a better understanding how funding works. But then to make some decent money, look at house hacking with your current residence.
So I'm renting right now, and mm-hmm. I would need to own a house to do that, correct?
No, you don't need to do that. So, like, if you have a spare bedroom, you know, or something, there's apps out there that allow people to, you know, with COVID, it's a little bit tighter, but like, you can sleep on your couch. There's like couch surfing apps. Like there's so many different things now that just generate money. That's an easy way to start. And if you can, your biggest expense is your living expense. That's everybody's biggest expense. If you can eliminate that expense, your net worth will dramatically increase, because you're getting rid of that expense. And now you can use all that money to reinvest. Yeah.
Okay. I mean, as far as my situation, I think it gets a little bit more complicated, because I'm renting from, I know the guy who owns the home. He's like my best friend's dad. And I think the lease, I don't know if it says in there that you can do that. Cause I mean, in my mind, he wouldn't want me to rent out the room because it'd be going to me instead of him. Right.
Yep. Totally understandable. And there are guys out there right now that are, they actually rent apartments, and then they'll Airbnb out. You have to be careful though. Cause like you said, if it's in the lease where you can't do that, then you're doing, you know, then don't do it. You know, maybe you can go to some of these landlords and ask them and say, hey, you know, can we Airbnb this out and set it up and stuff? And I'd say majority of them would say no, but I mean, there is a chance that they might do that. And there are investors that do that currently. I don't currently do that. You know, I look for, right now I have a bunch of flips I'm doing. I'll go in and buy a house for cash, fix it up, and then put like a credit line on it and either Airbnb it out or rent it, or I'll sell it. That's what I currently do right now.
Okay. And I want to get into all that, but kind of going
We'll
step
go
by
back
step
to,
here. Perfect. Actually, before we go back to that, one more thing about the house hacking.
Yep.
Wouldn't it make more sense to just live where you're at, right? And then invest in the property and just rent out all the rooms in that, because then you're making money on the room that you would be living in, right? Is that
Yeah. No, I mean, right.
It just
Yeah,
takes
that's a
more
great way.
upfront investment to do that.
Yep, that's a great way to do it. Or what I did after I bought that 8-family. So I actually bought a 4-family after that. So that's just 4 individual units.
Mm.
So what's cool about a 4-family is someone like you is you can actually use an FHA note or mortgage, and for 3.5% down. So all you have to do is come up with 3.5%,
Right?
and then you can buy that 4-family, and then you can live in one unit. You can then rent out the other 3. And that's what that was the first purchase I did where I actually lived in it and house hacked before that term became like popular.
Yeah. So there's, to me, it seems like there's 2 ways of looking at that, because the 4 unit has going to be a higher payment on your mortgage, right? But it's going to be less risk because there's less rooms it'll be a less percentage of the house that's vacant if people are leaving, right?
Exactly.
How would you balance that risk?
Yeah, you reduce your risks. So I mean, you got to look at a lot of things, like when you go in and buy it, like if it needs to be gutted, you got to look at comps. You got to look at how much everybody overestimates how much it's worth, and they underestimate how much it is the cost to fix it up enough to get it either rentable or sell it. So those are 2 big things that people miss out on. But you just need to determine, like, what are the cash flows every month, and what will happen too is, like, say you have your student loan debt, you have some credit cards, and you have like a card note payment, right? And you're trying to go in and get this 4-family, and you only have few grand or whatever it is to get it. They look at what's called your debt to income ratio. So how much you're making to how much your payments are.
Mm-hmm.
And really, like, there's different ranges based on the notes, but it's usually like anywhere from like 35 to 40% like debt to income ratio of where they'll approve it. But what's cool about like a duplex or a 4-family or something, or a 3-family, is if those are leased out, they actually can use that income on yours. So now your debt to income ratio, you have more room, so you can get a bigger property. You can get a more expensive property and qualify for it.
Oh, okay.
If that makes sense.
Yeah, that makes sense.
Yeah. So what I would do is, if I were you, is look for something that's a duplex or a 4-family, and that's it can be a little bit more expensive than what you normally pay. Just make sure the rents, look at the leases and see how much they're paying, and then get approved that way.
Got it. Okay. Yep. Yeah, that sounds really cool. And so that's essentially what you did initially, right?
Yep. After the 8-family, then I bought that 4-family. Yep.
And there's also some tax benefits from living in the home that you're renting out, right? What are some of those benefits as opposed to just?
Yeah. So living in it, you can deduct your interest on there. So that's good. And then if you live in it anywhere from 2 to 5 years and then you sell it, you don't have to pay capital gains tax on that.
Right. That's the 1030 or something.
No, that's a different, that's just strictly if that's a rental.
Oh, got it.
Yeah. That's a 1031 exchange. If you're strictly just renting it out, the benefits are you get a bunch of depreciation. So you get to write all that off. So even if you're making, a couple $100 a month, or whatever it is, like you're making $10,000 at the end of the year, that's all write off from depreciation, where you don't pay any taxes on that. So that's a huge advantage. The problem is that compounds. And then by, like, say in year 6, you decide to sell it. If you don't do what you just said, a 1031 exchange, that's what that means is you basically buy a like kind property, you buy something similar to that or more expensive, then you just delay those taxes and you roll that into the next one. You don't have to pay taxes on that. But if you sell it, then you have to recapture that depreciation on there. So then you have to pay that off. That makes sense.
Yeah. So how would you go about finding a good investment in real estate, as far as the house and how much you have to put into to fix it? What's your process look like for finding a good investment?
Yeah, that's a great question. So, it's kind of right now is it's a very different market because there's so many people trying to get either in the investment world. There's people just trying to buy houses, to live in. There's not enough on the market right now. They're way behind on new homes as well. Construction's way behind. So, I mean, you really have to be open and move fast. Like we were talking earlier, where I got this lead from Facebook, and
Really?
they posted on Facebook, and I looked at it, and the house it's pretty run down. It's not terrible, but then I looked at the potential because it's on a lake. So it's 4 acres on a lake. And if you can find either by a body of water, a great view, mountains, like I have a place in Park City that I like, people, those always appreciate way faster than anything else. So I moved on that really quick today, and I got to look at my text later, but hopefully it went through, and then I'll fix it up and Airbnb it out.
Dang, that's crazy.
But
Yeah, you're moving quick.
yeah, I mean, you got to look everywhere. Like, I have real estate agents. I have a bunch I work with. I don't just, if you're just looking to purchase a single family residence, then working with one agent is perfectly fine. But what I do is I try to buy multiple properties, so I can't just be stuck with one because there's so many. I don't get every property I need, so I work with a bunch of different agents, and then whichever one brings it to me, I make sure to go through the whole process with them and make sure they get paid for the work that they did on there.
Would you ever consider becoming a real estate agent and just doing it yourself?
It's a good question. So when I first started doing this, like where you're at, you could definitely do it and make some money. But my issue is I make way more money buying the house and fixing it up and then selling it, or doing a BRRRR strategy, which is renting it out to somebody. And I just don't have time to like sit there and list properties. And then you have to disclose everything too. So like if I go in and buy a house for cash, I have to disclose that I'm a real estate agent and all this stuff. And it's not a big deal, but I am not going out and listing people's properties. I want other people to list mine so I can keep getting more and more deals and scale that.
Yeah. So as far as finding that house that's going to cash flow, what are some things you look for? Is it location as far as the lake? What else is bed to bath?
Yeah, location is huge. Like when I started doing this, I bought two really great locations. I knew one was an up and coming area. So if like, you never want to be the first house being fixed on a street that's a rough street. You want to be either halfway through, third house, fifth house, whatever it is.
Like the worst house.
You never want to start. Yeah. Location is really important. You really want to find the best neighborhood that has the worst property on it, the crappiest property. And then that's the one you want to buy. And the reason why is that you can create the most value with it. So what I do is I'll comp it out. So I'll figure out, like, comps are just figuring out how much it's worth after I repair it. And then I figure out what the actual cost is. And what I try to shoot for is about 20 grand at least per house. Where if I flipped it and sold it, I need to make it that amount just based on the amount of time and effort I put into this on there. So that's what I shoot for as far as when I look for homes. I have bought property in a pretty rough area, and it didn't go well. So
oh, really?
Yeah.
How's your learning experience with that been? Have you had some bumps in the road, or is this way, but there's some downsides? What are some things you've learned from?
Yeah. So like I said earlier, I had that 8 family and then that 4 family, and I was like, man, I'm killing it. Like, I'm so good at this. I got in my own head. So I had these rules that I followed. Like, it had to be in an up and coming area. I needed the numbers to work. I wanted multiple units at the time. And this real estate agent bought me a deal in this northern area of St. Louis. And I was like, man, the numbers look great. Maybe it'll change one day. And so I went and looked at it and stuff. And I was like, it's kind of rough, but I bought it anyways. And it was really cheap. And it was a nightmare, like the worst thing I've ever done in my life. And I lost $60,000 on the deal.
Oh,
yeah. And I thought I was going to go bankrupt at the time. I was like, I don't have 60,000. Like, what is this? And I remember getting a phone call at like 3 a.m. where the water was leaking in the basement. I had to run over there and shut it off. And it was just, and I came back home and this house was already nasty. And like I took my boots off and everything. Next morning, I feel like little bites on my legs. And I'm
Oh
like,
no.
what is that? I got bed bugs from that house I went into. So I had to
Really?
get my house sprayed, and like it was just 2013 was a rough year. That's when all that stuff was going on, and I'm like, yeah. So that was
Holy smokes. So was the location what got you?
the location. Yep.
Okay.
Location is, you always hear the old saying, location, 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 right?
Yeah.
It's really important. Like it's really important. And then the next thing's probably the foundation. Like foundation work is, people underestimate how expensive that can be. But like, yeah, location is key. Like, is that an up and coming area? Will people rent? I like to go higher end and nicer stuff. Like I said, by the lakes, mountains and stuff. Now it's just easier. Like you pay a little bit more, but like you don't deal with problems like you would in like, rougher areas.
Mm-hmm. Got you. So as far as your process from when you started to now, so when you started out, you did it differently where you had 80% the bank covered, and then you got,
Yep.
What was the other 20% from?
So a seller finance note. So the owner, I would have take back a note. So this was I think it was a 2-year balloon note. So I can't remember how much it was, like $20,000 or whatever, $30,000. But basically, how I paid him back was through the cash flow of that 8 family. That after about 6 months, I had enough in there where I paid him back completely.
Oh,
But he took back the note. So, you don't have to use a bank to carry notes. Like I'm looking at this next week, I'm looking at a RV park, and it has some mobile homes on it. I was going to make it all RVs, but you can't really get a loan on that. It's kind of tough. So I'm going to have the owner take back a note on that. Like I'll give him a down payment and then work something out where once I can get it up and running in like a couple of years, then I'll buy them out completely from that note.
How do you talk to these guys? Are they people or just network?
Yeah, I mean it's all over. Like that's why I started doing the social media stuff more and more, and that's why I like what you're doing is you're getting that awareness. So like if people will push that out, right, where they'll see what you're doing, and then that'll networking is by far the most important thing in real estate. Is your network. Yeah. Like I could never do the deals and stuff that I've done, and same with like stocks. Same with Bitcoin, all that stuff is like, getting your network out and understanding those products is the best way to do it is you just start talking to people. And I just got 3 homes under construction in the last 2 weeks. And the only reason I did that was because through people I know, because it's so hard to find good deals that I was like, hey, my one buddy had these 3 houses. I got all the funding together. We partnered on them and now they're up and running, and hopefully they'll be done in about 4 to 6 months.
Man, that's so cool. I love hearing firsthand stories from people like you who've actually done it. It's not just like, some guy talking to 100 people in a crowd, like you're a real life example of how you can do it from, just right out of college. So moving from how you did it when you were, 22 or whatever, how has it changed now? Are you just putting a pretty big down payment because that makes it a little simpler, or how does that look?
Yeah, what's interesting is, you got to look at your capital outlay, right? So these prices were going up so much that I started selling a bunch of the property, and I started sitting on a bunch of cash because, like, especially when COVID happened, I actually went under contract back in January on my 8 family, and I was moving back home. I was in Utah, had stroke, so I moved back here to just to help them out and just keep going. I like investing more in St. Louis just because the price is a little bit more reasonable. So now I got all this cash. I sold it during COVID, which was awesome. I didn't think it was going to close because all the lending started to lock up, back in March, but we closed like in May or April this past year. Yeah. And so like that, that property I bought for no money, I sold it and I made $141,000 on it.
Hey, that's pretty good.
Yeah. So from nothing, like that's the power of real estate is like, anybody can do this stuff too. You just got to get the education and you got to put in the work. That's the hard stuff. And so then I started sitting on some more cash. And if you can go into these deals, like where you see an opportunity like the one I did today, where it's on a lake, I can fix it up and Airbnb it out. Like, I'll go in there with a cash offer, and they'll accept mine over anybody, just because that's a huge advantage, where most of them will have to get financing, and they don't have to wait on that with me. So then what I'll do is after I get it, fix it up, I'll go get a loan on it after, and I get almost all my money back, and I can do it again.
How does that work once you've already bought it in cash, getting a loan on it?
Oh, it's way easier. Because
Okay.
once you own the property, it's like a refinance.
So then, okay, they just give it you back, and then you pay like 3% over 30 years or whatever.
Exactly. Like, I'll fix it up, put value into it, so that appraised value will jump it up. And then usually they'll give me about 75 to 80% value. And then, so now it'll come back to me. I Airbnb it out. All that money's tax free because it's considered a loan. And then what I'll do is just roll that in the next one. And you just keep compounding it and roll it and roll it and roll it. And then all of a sudden you got a huge portfolio, and it's all tax free.
If you don't mind, what's your portfolio look like right now? How many properties?
So I actually sold most of them. I had I had about 25 like units, so including like multi-units and individual properties. Now I'm down to about 5 right now.
Wow.
Yeah,
that's crazy.
So, yeah, it's fluctuated and over the time, but now so I had all this cash from it. Now I'm building that. Now what I'm doing is just buying back in, and then buying better investments that I bought before that cash flow better, and once they hit a certain amount, or I might keep them for forever. Who knows? And then just keep doing that over and over again. And I'm starting to look at bigger projects now, like 24 units. And still the single families are doing pretty good.
Yeah. So as far as your big picture type of plans, and as far as like things like retirement and diversification, how are you incorporating this into a retirement? Are the assets your retirement? Are you in the stock market? What does that look like for you?
Yeah, so that's why I started actually Lead the Way Capital. So I have Lead the Way Realty, that's my real estate investing company. But then I started Lead the Way Capital, and my goal was, because I had so many friends asking me about the kind of the stuff I've been doing, I was like, all right, well, now I need to build a company out of this, because then I can send them to this stuff and like, hey, you can do this yourself. So the whole goal of the company is to get you to invest for yourself. And people, you do not need a financial planner. Like, I'm not a big fan, unless you're at a certain like level and have a lot of cash. It like at our stages, it just doesn't, when you're starting out like that, it doesn't make sense. Like, you got to not pay a bunch of fees, because those fees destroy your return. And when you start using planners, like you pay a lot of fees. But now they have Robinhood. I use Robinhood a ton. I love it because you don't pay any fees on, any of the trades you make. They have, Bitcoin, that you have all those different cryptocurrencies. You have those REITs. I mean, you have access to all these great funds that you can do yourself. So Lead the Way Capital's goal is, I want you to use your money, start investing it day one, right? Build that up and use that money to invest in real estate. So you're looking for a bigger down payment, like look at things like the S&P 500, which tracks the top 500 companies in the United States. And there's great funds on Robinhood like Vanguard and SPY that track those. And why I love that fund so much is because think about going to Target or going to Walmart or going to, or Tesla is a great example. All of those companies are in this fund, and you can access that for almost no cost to you. And then you get paid a dividend every quarter. And on average, it goes up about 7 to 10% a year. So think about, like, instead of using a savings account, using that as a savings account. Yeah. Because now you're actually getting a really good return. You're not losing to, inflation, and you're really building that up where it's going to be able to put that down payment way quicker on that next property. So,
okay.
As far as, I'll go back to, you talked about, as far as retirement goes, like there's a lot of stuff out there about, investing in a 401k and then retire, but there's not a lot of stuff in between that. And that's my goal, is to help educate people on how do you buy a car for cash? How do you buy a house for cash? Like, how is that possible? And it's definitely is now. And that's my goal, is to teach people how to do that.
Yeah, that's one of the things that I've been with this many people I'm trying to talk to. Something I'm realizing is that, like you're saying, there's this middle area that no one talks about, or I mean, not nobody, but a lot of people don't acknowledge, because they think there's rich people and they think there's, lower class people, or, even middle class people. But
Well, they call them middle. Yeah.
yeah. So, but what a lot of people don't realize is there's like another category is in my mind of people that aren't living off of millions of dollars a year, but they have enough invested where they don't have to work. I mean, you're not necessarily rich, you're living off of $40,000 a year, but your assets are returning that much and you don't have to work. Like, you have enough income from owning rental properties, or you have enough that your investments are returning like 4%, and that's enough to live off of. So that's like the craziest thing to me. And that's like, I'm trying as hard as I can. I'm swinging from the hip to do that, and talking to people like you to educate myself on, the best way to get to there. So, I mean, I think that's so cool that that's what your lead the way capital is. I was going to ask you about that. When did you start that company?
So on and off, I've been thinking about it for a couple of years, but I really didn't get heavy into it until the last like 6 months when I moved back from Utah. And I was like, all right, I got to really, like, when COVID hit and people were in food lines and all they got was $1,200 to survive. I mean, what does that give you? Another month? Like, that's nothing. When I moved back, and I like, it's not a big deal if I work or not. Like, that's true freedom, where people didn't have that. And my whole goal was like, well, how do we get people, like, what are we missing here? Right. And I think the biggest thing is, all we talk about is retirement, but we never talk about, like, in between it, like you're saying, it's like, get in debt with a big house, get your car, like we talked about earlier, and get in a bunch of credit card debt and student loan debt, and then hopefully pay that off by the time you retire, that made no sense to me at all. Right.
Yeah. Right.
And I was like, there's got to be a better way. And there definitely is. And instead of worrying about paying down debt is very important, but you need to put your money in investing first and then pay off your debt.
Yeah.
Sorry, go ahead.
Oh no, I didn't mean to cut you off. You could finish your.
No, I was just, I know, like, investing should be number one before any of the other.
Yeah.
Like, you should, Rich Dad Poor Dad, again, Robert Kiyosaki says, pay yourself first. That's what he means. Paying yourself first by taking your money and investing it, because that'll pay off your debt way faster than anything else will.
Yeah, that's awesome. I 100% agree. One of the things, though, with real estate specifically, the word debt gets, demonized with its connotation. When you hear it, it's, it doesn't sound good. But right. In my mind, there's different levels of, how bad debt can be. There's student debt, which I have, and I hate it with every ounce of my body. But there's also a type of debt that can help you, right? Especially within real estate. How do you go about explaining to someone why it's okay to have debt, or is any debt okay? Like having leverage on a house, or what's your process with getting into debt on a house?
So, anything that, like, again, the easiest way to look at it is it making you money? Like, is the debt making you money? If it's not, then that's not good debt, or that's not good debt. That's bad debt. So, like a car note, like, cars depreciate right when you pull it off that lot, right? And then you're just pumping money into this thing, and then you buy it for 30 grand and you sell it for 10 grand, right?
Yeah.
So that is a liability. Same with your personal residence. The reason why it's a liability is because you're always sinking money into it, like, from taxes to, maintenance to whatever it is. But is it drawing any income? And it's not. When you have like good debt, which would be leveraging. So, like, we talked about the 8-family. The only reason I got that property is because I leveraged, right? I used other people's money, banks, I partnered, seller finance note, etc. And that's how I got into that market, was because of good debt. And it made me a decent amount of money. And it's done that, over and over again. So there are good ways to use debt. And now with interest rates, the Fed keeps printing more money. So there's more liquidity throughout the the world. And then interest rates are so low, like borrowing money to get investments like that is a great idea as long as you don't over leverage. And what I mean by it's always good to have reserves, like cash reserves in case something happens, but just make sure you're balancing that, what you feel comfortable with and what you understand is like, hey, have an emergency fund, have a fund where, you can draw from in case like, hey, a big, I've had where I had to fix plumbing in one of my units and that cost me $8,000. It takes a while for that property now to return me that money once I have those big expenses like that. But over time, now you have cash flow, you have appreciation, you have depreciation. I mean, there's so many advantages to owning real estate. That's why, I mean, it's one of the best investments. So.
Yeah, that makes a lot of sense. So if you were to lay out like a blueprint for someone starting out of college to getting into real estate and where they should invest as far as how much should you put in the market or should it all go to real estate? Like, how would you lay out that plan if you could, like in a summarized way?
Yep. So I call it the 4 pillars of investing, which are investing in businesses, investing in real estate, investing in paper assets, which is like stocks and bonds, and then investing in currencies and commodities. And Ray Dalio, I don't know if you're familiar with him, but he owns Bridgewater Associates, one of the biggest hedge funds out there, multi-billion-dollar hedge fund. And his studies showed that having uncorrelated assets reduce your risk. Okay. So you have massive risk reduction when you buy that, when you spread your risk. So if I was getting out of college, I'll put a plan together. It's like, all right, we want to pay off your highest interest stuff first. Make sure payments are going to that. Make sure you have enough capital, like in reserve. So a lot of people say like 3 months, 6 months, just something in there that you have capital in case something happens. And then right away, I would start taking that money and I would open up like a Robinhood account, get an S&P 500, start putting money into that and start growing it that way. I'd buy a little Bitcoin. I would buy, so on the business side, like that's a little bit more complicated because like right. If you're buying equity in a company, I've been doing Start Engine where I've been buying into crowdfunding companies. I just want to see how it works, right? Because that's kind of like the new thing. And now I'm part owner in these companies through shares. Is it going to turn into something? It could. Like right now, they have a trading platform on there where I could sell some of my shares. I'm just kind of waiting it out to see. I didn't put a lot of money in there. But owning businesses like is very important. So I recommend everybody open up their own LLC. And the reason when they get out, and the reason why is you get your own tax ID number. And then it's a great way to start buying real estate through that tax ID number. You don't need a ton of them. Like people ask all the time is like, how many corporations, all this stuff you have set up. It's like, just when you're starting out, get one LLC because the tax ID number is important. Now you have a legit business where you can purchase property and everything through that. So I would recommend doing that. And I would recommend looking at, like we talked about earlier, is either a REIT, or if you want to go a little bit, look at house hacking or, buying a unit and then living in the other 3, like a 1 to 4 family. Those are the categories I would start with. And as far as percentages go, I mean, it all kind of depends on what you're making and what you need. It's hard to really determine what that is unless I actually looked at the individual and their assets and everything. And
yeah, one of the things you mentioned with the LLC, that makes a lot of sense. I've never thought about that. And I haven't heard people doing that a lot. Is there any drawbacks to opening up an LLC with?
I mean, it costs a little bit of money. It's not like you can do them now online for like $100. They're cheap. You make sure you have an operating agreement. So that's what a lot of people leave out when they start an LLC. They think they just file an LLC, then they're okay. So an operating agreement tells you exactly what the LLC does. And what'll happen is like this bank, like when I went and got that mortgage from that local bank on my 8 family, they asked for the operating agreement and it'll say like it invests in real estate. And then they're like, okay. And they make sure that I have the ownership of that LLC. But what's really interesting about it is that network side, if you really want to grow in real estate fast, partnering is a really good thing. People get really, really greedy for some reason. I've done it myself where I'm like, I'm going to keep all this stuff myself. But what happens is you don't scale. But if you can go out and find partners to you find a good deal, if you find a good deal, it's easy to find people that will invest in it. People don't realize that. It's not about the money. It's the deal. If you find a good deal and you can analyze it, it's really easy to find real estate investors. I mean, you see it online, right?
Yeah.
I mean, look at social media. Like I work with some of the multi-million-dollar real estate investors, and if you bring them a good deal, they'll invest in it. So
Wow.
I will too. Yeah. Yeah. So it's all about the network and then finding the good deal.
Yeah, that's really good insight. Thank you for that. Because people get this idea that it's only a rich person's game where you have to have money to make money, which is true in some facet, but you're saying, you can use other people's money, or you can do it in all these different ways.
Yep.
And I mean, you're a real life example of that for anybody watching like this. You've laid it out and explained how you did it. There's no secrets. Like, that's just the way it is. And it's hard work and diligence and studying everything. And also working with people like Warren Buffett. How do you still keep in touch with them, or?
No, it was a very short stint. It wasn't huge.
Yeah.
But the Warren Buffett investing class at Mizzou allowed us. So we went, got to go meet him. And we did a Q&A with him, question and answer. We got to eat lunch with him. He gave us tickets to his annual meeting. It was very short, but like all we did the whole year was just study of how he invests and how he looks at companies. He does what's called value investing. So he looks for companies that, are undervalued and have good cash flow. He looks for things like, simple things that people are going to keep using. Like a big thing he talks about is chewing gum. Like, how much is chewing gum going to change? Probably not much. Are people going to keep chewing gum? Probably. Is it probably going to grow a little bit? Probably. Like, if the more people that, the more babies there are, eventually they're going to chew gum, right? So he looks at very simple. And that's the way I look at it with people with investing in the stock market is like, all right, think about stuff that you use every day and invest in those companies, because now you're making money on stuff that you're spending money on. So, Amazon is a great example. It's like, own some of that share, and you don't have to, like, people go and look at, like, Amazon is like $3,000 something for a share. You can buy fractional shares of that stuff. Same with Bitcoin. Everybody's like, oh, Bitcoin's at $40,000 a coin. Yeah, but you can own $100. You can own $50 of it.
Right.
And like, people don't understand how powerful that is when you over time. But if you would have bought 1,000, I don't know if you saw that one post I had, but if you would have bought $1,000 worth of Bitcoin 10 years ago, you'd have $237 million.
That's insane.
That's the power of compounding. Like, it's very powerful. But the thing is, everybody thinks they're going to make money overnight. And this is a long game. If you want to pay off your house, you can do it in 10 years. You can do it in 20 years. But you got to put a game plan together of like, you got to understand compounding, and you got to start investing in assets. If you just sit there and try to save money from your wages, you're never going to make it.
Yeah. And that's a common theme I've heard from everybody who's interested in finance or, real estate or whatever it is. It's that characteristic I tend to see a lot, is that long-term planning, like not thinking for that instant gratification of when your next check's going to come and what you're going to spend it on, but planning for that like 10 years from now. I mean, that's in the big picture, 10 years really isn't even that long.
It's not that long.
Talking about something paying off a house. And hey, if you shoot for 10 years, you're going to be a lot closer than if you were planning on 30. So.
Yep. No, it's so I'm a big fan too of your Tim Ferriss.
Yes.
Tim Ferriss. Yeah. So he does like the 4-Hour Work Week, and it's a good book. What it does is like, it helps you like automate things like in your life and business and stuff. So it's a good book. But he had the term mini retirements. So everybody, the old school was, again, save your money up, retire when you're 65, right? And then go on vacation. I know a lot of 65-year-olds, they don't travel that much. They stay at home, they're with their families, it's not, but like, I wanted to travel a bunch. So I was like, all right, how do I figure this out? And what they do is, he's like, work your ass off for 3 to 5 years, and then take like a 1 to 6 month break, or do something like you really want to do, like a couple times every weekend, or whatever it is. So I took that mentality with my background with Warren Buffett and Rich Dad Poor Dad, Robert Kiyosaki, and I started investing in these assets. And then this allowed with me doing that with the real estate. I went to Australia, I scuba dived in the Great Barrier Reef. I've been to Fiji, been throughout all the West, snowboarded probably almost every mountain in the United States. Mexico. I went to the Super Bowl this past year. So I'm a huge Chiefs fan. I know we were talking about it earlier, but Super Bowl's, they won the Super Bowl and I was there. It was awesome.
Oh,
I
that's
was
so
at
cool.
last year too. I went to New Year's Eve and I did the ball drop in New York. Been to Burning Man, Coachella. Like the only reason I could do all this stuff was because of my assets. So I took my income at the time I was working and I invested that in assets, and then I bought liabilities with it. What most people do is they take their wages and they buy their fun stuff and then they have nothing left over.
Yeah.
So that's the one thing, is just take your money, put it in assets. Then once those start generating money, then do the fun stuff with it. And it's quicker than you think. Like, I'm 35 and I've done all that stuff.
Yeah, man.
So it happens pretty fast.
That's so cool. Yeah, that's people get this idea of, they want to do what's fun now because, they're not going to live forever. But like you figured it out. You grind when you're younger and you work hard, and then you can have the rest of your life. Essentially, if you built up enough assets, you can kind of just decide when you want to do things. And naturally, I mean, people like you probably are going to end up working more, but it's on your own terms at that point instead of somebody else's. So that's really cool.
100%. It's all about control, right? It's like, can you take control of your own life? And that's what my goal was. And that's why I even worked harder at my old jobs. Like I used to work for this construction material company, and I started it in St. Louis, and then I went out to Utah to get it going, the whole market. And it was a great job, and I loved it. Great company, and it blew up, and it was a lot of fun because I got to develop a new market. But I took all that money and like I said, I put it in assets, and this allowed me like to move back and do my own thing, and kind of, I don't have much worry now, where, financing and not understanding money and not like dealing with the stress of not having it and all this debt, like once that's gone, you can wake up in the morning and decide what you want to do that day. It changes your life dramatically.
Yeah. I mean, dude, that's my goal right now. That's like the biggest thing I'm going for. And it's inspiring talking to people like you who are in a spot where you can look back on what you've done and be proud of it and like pass that information on to me. And 10 years from now, I'm going to hit you back up, and I'm going to have a real estate deal for you. And I'm going to tell you I paid off all my debt, and I'm going to be financially independent.
Dude, just keep that mindset, man. Keep that mindset. Keep networking. I'm telling you this. I like your forum for your podcast. So, yeah,
that's awesome.
Keep grinding.
And I don't want to take too much of your time. I have a few other things I wanted to ask you about.
Yeah, go ahead.
You're mentioning Bitcoin. Where do you see that going in the future? Is that something everyone should be a part of? When and how should someone go about that?
Yeah, Bitcoin's an interesting animal. A lot of people are scared of it, right? Because it's so different, and you hear all these stories, like, what is it going to turn into? Is it turning into something? I mean, I believe it's already something right now. You can call it a store of wealth, which is similar to gold, right? Gold and silver. Or, a lot like the far extremists think it's going to take over as the new currency, like the world currency. So like you would go to a store and you would say, like, there's a bottle of ketchup and it's 0.003 Bitcoins or whatever instead of dollars, right?
Right.
That's the extremist version. And then the opposite, of course, is it goes to zero. Well, even when it dropped back in COVID and it went down to like 3,300 a coin, or it was that cheap, it never went to zero. So that's a really important factor, where it never going to zero. Also, and it recovered and passed it in less than when the first time it dropped, it was like 17,000 and everybody lost a bunch of money. I actually lost a little bit of money because that's right when I started getting into it. And I followed it and I was like, okay, well, this is just being pumped up by just people putting money into it and then they're dumping it, right?
Yeah.
The reason why I actually invested in a lot in the past, like 5 months, was I like what's called follow the money. So follow what rich people and rich companies are doing. So PayPal and Square, the Cash App, they went into it and said, you can start transacting this on their platform. And that happened in like, I guess it was like October, November timeframe. And right before, like during that time, I put a lot of money into it because I was like, okay, well, now they're having all these transactions go through it. It's going to push that price up. And then there's other companies like MicroStrategies, where that guy and took all the MicroStrategy's money. It was like $500,000 in cash and invested that all in Bitcoin. And now it's, it's doubled, tripled. I don't even know how much he has now into it. And people were just like hating on him for it. But he just likes it because the biggest thing is like, there's only 21 million Bitcoin that are going to be made. There can't be more than that. So there's a scarcity. That the problem with the financial system with money is they can print unlimited cash. Right. So what happens is the value of the dollar goes down every time they print more money. Mm-hmm. But and that's why holding assets, it pushes those values up. That's why real estate prices are going up. It does affect Bitcoin. It does affect stocks. Like, the stock market recovered so fast from COVID is because they pumped so much money into it, right? And they started buying a bunch of corporate bonds, which kept it afloat and just shot back up. So Bitcoin to me is like that new version of, it's a way of store of wealth. You can exchange it. So I can sell it to you, you can sell it to me. And there's an unlimited supply of it. So that's why everybody should own a piece of it. Even Fidelity came out and told all of its investors that they should have a percentage of their portfolio. I think it was like 1% to 3% should be in Bitcoin. And if Fidelity's saying that, I mean, something to pay attention to, right? I mean, that's a pretty big financial company. So it has a lot of potential. I think, you look back at the internet when people were making fun of the internet when it came out, they're like, I don't know what we're going to use this for. It's before your time, but there was literally on the news, they're like, the internet, I get enough information already. What am I going to, I don't want to be subscribed to the internet. It's just goofy. And now look at it, right? And I think Bitcoin's kind of in that realm right now of like what it'll be. But it's definitely, you're seeing in like third world countries where now they have a way to exchange actual something of value when their currency goes to nothing. Like when they have hyperinflation and then it runs up and they can still use Bitcoin to, buy their daily goods. So you're starting to see stuff like that. You're starting to see more transactions and it's beating inflation. So
yeah. And almost in the same way that you would keep the value of your money by investing in real estate, you could essentially do that with Bitcoin if this is actually going to be a long-term form of transactions.
So I look at it like, we talked about savings accounts because savings accounts pay you 0.001%, right? So nothing. So having a savings account is not investing. But I look at it as, you definitely want some cash, but taking my real estate investing, all that cash from that, and then I'll put it into Bitcoin and I'll put it into stocks and stuff like that. Now we're getting that interest to go up and I'm not losing it. And then when a good real estate deal comes, I'll sell it and then I'll go buy that real estate deal and I'll just keep rolling it back and forth. Now I have a good place that grows pretty quickly. And what also I like is Visa now is coming out with a Bitcoin credit card where they'll pay you back like it's 1% to 3% cash back in Bitcoin.
Are you serious?
Mm-hmm.
I have not heard of that.
Yeah. So it's on so there's a few trading platforms. So Coinbase, BlockFi, Gemini, those are all like you can trade cryptocurrencies on. I'm on waiting list on them, but they are starting to become available. But yeah, so you'll get paid back in Bitcoin. And if the Bitcoin growth keeps it where it's at, keeps growing that normal trajectory, by like 3 to 4 years, you would have all your purchases paid back because the Bitcoin growth from that.
Yeah, they might be giving you like 90% cash back on buying.
Exactly. And just from your normal purchases, like that's amazing if that's truly what will happen. So I'm on the waiting list. I think, everybody else should definitely jump on those. But that has huge potential.
Yeah, that's super interesting. Yeah, Bitcoin's one of those things that I feel like comes in waves where people get all hyped up about it and then it kind of dies back down and everyone's like, oh, it's a cryptocurrency. You're just kind of one of those nuts. But it's, I think it's standed the test of time where now it's, kind of being respected by even more people and, it's getting a little more renowned.
There's definitely like bigger companies are looking at it, and now that's happening. It's changing the market. So, instead of just like individual small investors, putting money into it, when hedge funds start looking at it and it's getting close to that market cap size, it's almost at $1 trillion market cap size. Now they'll start looking at it where if they start pumping money into it, you're talking, it could be billions of dollars, which will really make the price run. And that's why they're like a lot of companies are pricing it out anywhere from like 100 per coin to 300 per coin, because they think if it hits that market cap size, these big funds will start putting money into it. And you're starting to see that happen here a little bit. It hasn't really picked on yet, but it's getting closer.
Yeah, it's exciting. It's at the minimum, if you have a portfolio, dedicating a few percent, maybe 10, if you're a little more of a proponent, doesn't hurt.
Yep.
It's kind of exciting. Well, awesome. Yeah, that's some good stuff on that. Definitely trying to learn as much about Bitcoin, because it's coming up a lot, and I want to be as much in front of the curve as possible with all the different dynamics.
Yeah, people try to explain it and they try to compare it to things, right? The problem with it is this is such a new thing. You can't compare it to anything. It's its own new thing. So it's like, you talk about, an exchange, store wealth, all this stuff. It is all that stuff, but it isn't.
Mm-hmm.
That's why it's so hard to explain it, because it's so new. It's so different than what we've ever dealt with before. And that's why having some it could change your life.
Yeah. And it just seems like it makes sense for the progression of people,
Mm-hmm.
having paper that you go and trade for things. It just seems like a little bit old school compared to having a digital currency that you can, see a transaction code and store it, and it's limited amount and has value, and everyone knows its value. It seems like it makes sense to me. And
yeah. And what's cool about it is say hey, I'm going to come and buy your car from you. I can take my coin off Coinbase, put it in a wallet, and I bring it over to you, and I can transfer it over to you, and no one would know. So it's like cash. It has a cash element to it.
Yeah.
Which I never thought digital anything would have
a way tax benefit.
Yeah.
Right.
Yeah. So it's interesting.
Cool. Last few questions here, since this is the Get Wealth podcast. I always like to ask what your definition of wealth is.
Definition of wealth. So I'm a big fan of Buckminster Fuller. He was an engineer. He passed away in the 80s. He was in school, and he was an engineer at Harvard, dropped out, never graduated. He was actually about to kill himself, about to jump off a bridge, I think it was. His daughter died from polio, I think, and his wife left him. It was just a mess. And he goes, I'm going to live my life as an experiment and just figure out why we're here on Earth. And he actually developed the geodesic dome. So down to Epcot Center, that's his design. So he's actually one of the most well-renowned engineers. Harvard even says he's an engineer from Harvard, even though he didn't graduate. So, but he wrote a bunch of books. And but in one of his books, he talks about what's the definition of wealth. And he talks about is how many days can you survive without working? So if you think about that right now, if all you have is $1,000 in your savings account, and that's all you had no cash coming in or anything like that. If you stopped working, you only can survive, and it costs, $1,000 a month. You only can live for 30 days.
Yeah.
So if you have enough cash flow coming in, can you live forever without that? So I think that's the definition of wealth to me is how many days can you live without working?
Yeah, I think that's a great definition. It makes a lot of sense because, you could have $1 million coming in every single month, but you could be spending $999,000, and how wealthy are you really at that point?
Exactly.
Well, cool, man. I really appreciate you coming on the Get Wealth podcast. I've definitely learned a lot, and I think anybody watching this has there's a lot of good information to take from it. So yeah, definitely really appreciate it, and I look forward to keeping in touch with you if you don't mind me bugging you every once in a while.
All the time, man. I'm available. Check out Lead the Way Capital. Whenever you need something, just shoot me a message, and I usually answer pretty quick.
Awesome. Is that the main place you want people to know you? Lead the Way Capital.
Yeah, Instagram. I got Facebook. I kind of do them all. LinkedIn, wherever. But I'm probably most active on Instagram.
Perfect. Well, all right, everybody. Get wealthy. Thank you, sir.
Thanks. Appreciate it. Take it easy. See ya.